Hey guys. So have you ever wondered what does your credit history have to do with your approval for a mortgage loan? Well, if that is a question of yours or something that is looming in the background, this is the episode for you. We are going to talk about how your credit history impacts your approval. A lot of times people get caught up on the credit score, but really it's the history, what's shown on that report. So, my name is LaShawn Abraham. I am half of our Team Abraham team here in Summerville, South Carolina. I am the sales manager at Gill Mortgage, and we are definitely happy to be with you guys today. So, next, I'm going to pass it to my other half, Mr. Gavin.
Gavin Abraham, your loan advisor here in Somerville, loan officer, and your source for all information of mortgage. But guys, happy to be here. Another Teach Me Tuesday. Um, I hope the people get just a little something out of what we got to give them. Take it and let let it marinate over the holidays for you.
Mm, mm. Well, man, I'm gonna just go ahead and give this disclaimer real quick. If y'all hear something in the background, it's Brady. That's my dog. So just gonna let you know.
Hey, you know you had a dog.
Yeah, I got the wife and the girls tricked me into getting a dog. So yeah. But I love the guy. I love that little fella. So that's my guy. But my name is Wilmot Berry, real estate agent here in Orangeburg, South Carolina with eXp Realty. The Berry Group brokered by eXp Realty, helping my clients reach their real estate goals.
I mean, you're gonna have to. Well, I might have to talk to your wife on how they got you to come around because my daughters want a dog, and Gavin's like, no, no dog. We're not getting a dog. So,
Gavin, don't fall for it, brother.
Oh, listen, brother, it's
Uh,
not even a question.
what kind of dog is it?
it's a Frenchie. Uh,
Ooh,
yeah, a
cute.
little Frenchie, and he's grown on me. Don't get me wrong. I ain't gonna lie, but you know, when it comes to taking care of him, majority of the time, it's gonna be on you, Gavin. Just gonna let
Oh,
you
I
know.
already know that's why I'm none coming in the house. So,
Yeah,
guys, that's something to think about. You gonna when you buy your home, are you gonna have pets?
yeah,
Just throwing
absolutely. Yeah.
something to take
Happy
into
wife,
consideration.
happy life. But back into the topic of discussion. So,
Yes.
how does your credit history affect your mortgage loan approval? How does it affect your process? Where does it come to play? I mean, we know that credit is probably one of the most popular questions that is like Google, the most popular questions that is asked, like what my credit score need to be, and so forth. So today we are going to unpack all of that because there's various stages of credit that comes into play when it's time to, take that plunge and actually start applying for a mortgage loan. And so we're just going to jump right in. So,
Mhm.
round of, I guess, a round robin, what would you guys say is a good credit score to kind of start this process off if a person wants to buy a house?
Well, let me just say this. I
Mhm.
get calls all the time about this. People are calling me and saying, "Man, what my credit need to be? You know what I need? I hear this. I hear 580,
Mhm.
500, 680, 650." And me, I always kind of give the safe answer. I'm not going to say, "Hey, yeah, you can have a 500 credit score and still get approved for a loan." I know that there are some companies that they say that, but I try to get people to say, hey, I try to get people in that 650, mid 600s, on the safe side. I say, hey, if you're in mid 600s, I don't see why you shouldn't be okay unless it's something else dealing with your financials, why you couldn't get approved. So
Mhm.
I know debt to income plays a big part, and also like you guys stated, income as well. So
Mhm.
I just want that's kind of like my 2 cent on it. I try to keep people in that mid 600. I try to give them that advice to stay in the
Mhm.
mid 600s. So
Yeah. No, I mean that's a good honest answer. I mean, when it comes to credit, I mean you have great credit, you have good credit, fair credit, and then
Need
credit
some
you need to
work
work
credit.
on. But yeah, I mean, as far as a fair credit score would be probably around 620,
hmm
620 to 680. Let's throw that out there. And then you have good credit, which is a 680 to probably mid to low 700s, and then great credit, we're talking 740 and higher. Credit scores go as high as 850. So, and I believe they go as low as like 350, if I'm not mistaken. So yeah, I mean, you got a range of where credit falls as far as the score. But again, what we're going to also unpack is how does your credit history. Now, your credit history, of course, makes up your credit scores. But
now, before you go there, I did want to say something. So when it comes to credit score, right? What I like to tell people when they call and ask that question, because like I truly just spoke with a potential buyer just last week. And so she was thinking that her credit score needed to be at a 720 to buy a house. And so I told her that one, you have to take a lot of different things into consideration when you're looking to purchase a home and the type of loan that you're getting, right? So, of course, we kind of talked about in previous videos, you have your conventional loans, you have FHA loans, you also have loans with down payment assistance, you have rural housing loans like USDA, we have bank statement loans if you're self-employed. So there's so many different types of loans. And so the proper way to ask that question is based on the loan type that you need to fit your current situation. That's really going to depict what credit score you need. So that's really the true answer to that question, because how much money you have saved, a lot of what Wilmot said in regards to your debt to income ratio, what your needs are, the location, all of that stuff plays a part in conjunction with credit. And so depending on your situation can determine what that score is, because the truth of the matter is we have, closed loans and people have bought houses at a 540 or 580 credit score. They have. And the truth of the matter is people have bought houses at an 800 credit score too. And so it's really kind of customizable depending on your true needs, is what I would also say to that.
Yeah, but to make it practical for people to truly understand and know that you got a 620. We want you at a 620 or higher, because that just allows us to qualify you for the multiple different types of loan programs. So a 620 or higher is definitely workable. And if you're not there, there's tools and resources that we have to help get you there.
Let me ask this question. Let me step in. So because I do deal with a good bit of buyers, and they come to me and they said, and when I tell them about you guys, I know sometimes they might be a little hesitant because they don't want to get their credit pulled. Can you go into that a little bit? To kind of ease some of the mindset when it comes to getting your credit pulled, hard pull, soft pull. Can you kind of talk about that a little bit?
Yeah, and I'll let you speak more on hard pulls and soft pulls, but what I want to address again is the mindset. I think the hugest fear is not getting my credit pulled; it's knowing what my credit is. I think that's the first hurdle that people have to get over. Yeah, no, it's that fear of the unknown. It's fear of finally knowing that either I have something to work on, or facing the fact of my credit is bad, and I need to do something about it. So once people get over that fear, when they're hesitant or don't want someone to pull their credit, we just have to address that and attack that first, so that we can pull back that layer and then address what actually is in the credit report and what things are affecting your credit scores. But that's
I think that's perfectly said. But I will also add on top of that, before I kind of address the soft and hard pulls, is a lot of times, I've heard this more than I can count. People would truly say, well, I don't want you pulling my credit because you're going to make my credit score drop, right? If a lender pulls my credit is going to go down negative. That is wrong. That is false information, because credit inquiries only account for 10% of your score, 10%. So a person thinks that because we pull their credit, if it's a hard pull, that we're going to take their score from a 600 to a 500 or something like that. And that's not true. It's not true at all. But I also tell people, if you kind of exactly what Gavin said, if you're looking to purchase a home and you don't even know what you need to do, you don't know where you are, you don't have no idea where the scores are, then you need to get your credit pool because you need an accurate, reading of where you
Uh-huh.
truly stand. And if your credit score goes down, let's say 10 points, going from a 650 to a 640 is not going to change anything. It doesn't
Mm,
get you a better rate. It doesn't change your eligibility or anything like that. So I think there's a huge misconception of the impact of a hard pull versus not getting it pulled at all. But not all lenders can do a hard versus a soft pull. Generally speaking, when we get an
Well, tell the people
applicant.
what a hard tell what's the difference between a hard and soft pull. What is
that's
that?
good. That's good right there. Yeah.
Yeah, no, that's a good question. So thank you for asking that. So
Mhm.
pretty much a hard pull is truly when we truly, I call it truly pull your credit. And so an inquiry will appear. It pulls from all three of the major credit bureaus, and it truly sends, I call it like an imaginary signal to the credit bureau that we want this data. We're pretty much taking a full look at whatever is reporting on your credit. A soft pull, it still goes out. You don't have to necessarily do it to all three credit bureaus, but you can just get the most recent reported data. It may not get everything, and it may not be 100% up to date, but it doesn't leave like I call it a footprint or imprint on your credit. It doesn't show up as an inquiry or anything like that. It's just kind of like, okay, we're taking a look, and then that's it. So it's not a full pull on it. That's the easiest way I can explain that. And so, like I was trying, what I was getting to is that not all lenders can do both a soft and hard pull. And so, one thing you should ask, before you let someone pull your credit is, hey, is this going to be a hard or soft pull? But the reality of the fact is, really just depends on where you think the scores are,
Mm,
versus if it really is going to make a difference if it's hard or soft.
mm. So I know. So let me ask you this question.
Mhm.
I know, Gavin, you said, "Hey, we would like for you to be around a 620, right?"
Mhm.
What if they think they might be at a 620, right? But they scared if they get a hard pull, it's gonna take them
Mm.
down to a 610.
Gotcha.
What would you tell them at that point?
Yeah. Well, I mean, easy. So we're one of those lenders that can do a soft pull.
Mm,
If you think you're borderline right at that 620, okay, let me do a soft pull to see where your numbers are. Because if you are, regardless, if you are at that 620, at some point we're still going to have to do a hard pull on your credit.
Correct.
mm,
But we can do a peek behind the sheet just to say, hey, okay, yep, it's verified that yeah, your scores are right at about a 622, whatever it may be. And the possibility that when we do go to do the hard pull, it may drop a point or 2 point. It may not drop at all. It's just we can't guarantee that when we pull your credit, your scores are going to remain exactly the same or they're going to drop. I've seen several times where I've done a soft pull, verified that okay, yeah, you know what work we need to do to get you where we need to be, and then when I go back to do a hard pull, nothing changes. Their score remains the same.
mm,
So our hard inquiry didn't affect their credit at all. And then sometimes I've seen where scores increase. It can be like 5 or 6 points higher when we go to do a hard pull, and that's because there's more data. Because now that we're really doing an imprint on the file, there's more data being pulled from the credit bureaus versus when we did the soft pull. So
mm.
the scores could be a little bit more manipulated, a little bit or more accurate. So yeah, I mean,
Yeah, one thing I would add to that as well is it also depends on, to answer your question as well, Wilmot, it also depends on where people are pulling their credit from, right? A lot of people like to use, places like Credit Karma and things like that to check their score. So they are thinking, oh, well, Credit Karma has my score at a 620. So now if I go to this lender, they're going to make my score go down and I won't be able to qualify because I'm now under a 620, right? And so mortgage credit scores are completely different than these like FICO or Vantage scores or whatever else you're checking it from. They're not quite the same. They're weighted completely different. So the rule of thumb that I try to tell people, honestly, like, well, how do I know which site I can go to get my mortgage score and what site is, the best to do? I tell them, to be honest with you, if you really want the most accurate reading of where your credit is because you're trying to specifically purchase a home, let a mortgage lender pull your score,
Mm.
because the scores that mortgage lenders pull across the board, they are unanimously the same, versus you going to Credit Karma or Credit Sesame or I don't know, all these other places to get the scores, and you noticing that they're completely off by 10, 15, or sometimes 20 or more points.
Yeah.
Mhm.
Yeah, I've seen that a lot. I've seen some people say, I've seen some big differences, like 40. I've seen 40 points
Oh yeah, absolutely.
one way or the other. Like I so I don't recommend my clients going to Credit Karma or whatever like that. Now I will
Mhm.
say this. Now y'all let me know if I'm wrong. So this is a learning point for me.
Mhm.
Um, I did used to send people to Experian, right?
Mhm.
And tell them, I said, hey, the Experian has a 30-day free trial. Hey,
Mhm.
you can check it there, cancel it before the 30 days in. That's a tip.
Mhm.
I don't know if that's right or
I like
not,
that.
but yeah. If you just want to kind of, check the temperature where you might be at,
Mhm.
and kind of figure it out if you don't know where your credit score is, you've heard it from the professionals up here. That you can go to Experian and possibly check your credit there with their free trial. So
Mhm.
yeah.
Yeah, I mean, I
Yeah.
think that's very solid advice. And then for those of you who are just tuning in, I mean, what we're going to talk about is not specifically the credit score, which I know we kind of touched on that, but really the credit history. Because the
Mm,
thing that you really want to look at is the history. Because you can have a 620 credit score, because I got a client like that now. You can have a 620 credit score, but your history is like jacked up. You have a bunch of charged off accounts, you have accounts in collections, you have overdue balances, you have credit limits that are running too
mhm,
far to their max limitations. And so your credit history can severely impact you from buying a house. So that's what we're going to kind of really dive a little deeper in, is not just specifically focusing on the score, because there's a lot of things that you can do to manipulate your score. But
mm,
if your credit history and report is showing a lot of, red flags, then it still can impact
mm.
you from truly buying a house.
Wow.
Now I know one thing that just to take a step back, a lot of people don't even realize, why is it that, what is credit for? What's the purpose? Why does the lender even need to check my credit?
Mhm.
We never really take the time to answer that question. And I mean, honestly, guys, the answer is we want to know how much of a risk you are to loan your money.
Absolutely.
Are you a big risk or are you a low risk? Are you what credit tells us is that your ability not to borrow money but to pay money back.
I think
Mm,
someone said it was said past behavior predicts future habits or something like that is a saying.
Yeah,
Because
mhm,
like your credit history tells us your past, behaviors. Have you borrowed money and have you paid it back? Or have you borrowed
on
money
time.
and overextended yourself? Right. So when now, and this is like, when typically most people have maybe under $100,000 in debt, right? Because your credit cards might be $1,000 or so. You might have some car loans that may be 30, 40,000 or so. But now you're asking to borrow hundreds of thousands of dollars. You're trying to borrow two, three, $400,000. So if your past behavior is showing that you have a history of not paying back these smaller chunks of money, then what will your present behavior predict? Something.
that makes sense. I mean, if you really think about it, though, like
Mm-hmm.
you got that family member that always asks for money, right? And then they come wanting to buy. I mean, not buy, but borrow some money, but they ain't gonna pay you back, or
Exactly.
they have a history of not paying you back. So your that person's risk level is gonna be higher. You know what I'm saying?
Yeah,
Uh,
I mean, I think you're saying it very well for majority, like for myself. That's very relatable and
yeah,
understanding to me. But it gets difficult. It's hard for some people to understand that from a
absolutely.
professional standpoint when they're
Oh, that was a year ago. Yeah, that was,
yeah. I don't care. Whoever it was, that my homeboy or the classmate I went to school with that borrowed $5 from me for lunch or for whatever it may have been that never paid me back. Bruh, if he came to me now at 30 something years old, I'm still gonna be a little hesitant. Like, man, your history
His
show
credit
me that
history ain't good,
I don't
right?
think I can't even lend you $1 right now. Cause I can give you it, but lend it to you, like let you borrow it.
Yeah,
Nah, I don't know. Your history showed me different.
it makes sense, guys, and we have to, as people, we really have to be mindful of our credit history because you just never know when you might need to, if it's for a house or is it for a car or is it for a business loan. You need to make sure your history is good, so that you won't have any problems when you go to the lender when you need to go ahead and get a loan for something. So
But
I
even
really
with
like
all,
that.
yeah, even with all that
Okay.
said, you can still, even if you made some different choices, that affected your credit history.
hmm hmm
There are tools and we have them. There are simulations we can run to help you and guide you on what changes you can make, immediately or on a certain time frame to help change your credit outlook, to increase your score. So definitely consult with your mortgage professional.
Yeah, so two things I am going to touch on before we do end, but when it comes to consulting with a mortgage professional, in regards to if you're, I put this in parameters like people work on their credit for different reasons. So for this, purpose of this conversation, this particular Teach Me Tuesday, this is for specifically if you're trying to buy a house, right? If you're trying to buy a house, stick with the people who work in the industry, people who have the licensing to have that conversation with you to truly assist and guide you, right? Because what ends up happening, and no shade to any people who does this for a living, but there are a lot of credit repair people out there. There are a lot of people that say, hey, I can fix your credit, whether it's no credit, bad credit, I can do all these things to manipulate it. And granted so, they probably can. But what ends up happening, if you're trying to fix your credit to specifically purchase a home, what I've seen a lot of times is some of the stuff that these credit repair people are doing truly like put you in a worse position than a better position, because you can't have certain things on your credit or not have enough of certain things on your credit in order to truly purchase a home. And one of the biggest things that I see a lot are disputes. A lot of credit repair people, they start off and they just want to dispute everything. Oh yeah, let's just go dispute, let's just dispute, let's just dispute, or whatever. And you don't want to do that, because
hmm
when you go buy a house, we can't have any disputes on there.
Mm-hmm.
And
Wow.
so it
Wow.
may appear that your credit score is higher or getting better, but it's not, because what ends up happening when you dispute something on your credit, you're telling the credit bureau, hey, something's wrong. And so when you tell them something is wrong, they freeze it. And
Mm,
then they don't calculate that item in your scores no more. So when they don't calculate it, of course, your score is going to go up because they're not taking that item into consideration anymore. But as
mm,
soon as we tell you to remove the dispute, what happens? Your credit score drops. And so then people are like, well, I don't know what happened. I've been working with this credit repair person for a year and their credit score is still the same or worse.
wow. So if someone, let's just say someone's listening to this right now,
Mm-hmm.
and they're like, man, I ain't nowhere close to no 620. But they do desire to buy a home.
Mm-hmm.
Should they still call you? And
Absolutely.
Absolutely.
all right, all right. So if y'all out there listening, man, and y'all feel like, hey, man, I'm not nowhere close to a 620 right now. Hey, it I know the new year is right around the corner.
Mm-hmm.
Hey, give these guys a call so that they can help you get on the right track, and hopefully in 2024 you'll be a homeowner. Okay.
Absolutely. And
Yeah.
Wilmot, I mean, now is think about it. Right now is prime time to do so
Mm,
because there are a few things that's happening right now. Some
mm,
people, depending on what industry you work in, you're probably working a lot of overtime, a lot of it's a busy season for you, so you may
Mhm.
be getting extra money. As far as extra income, you might be picking up a second job. A lot of people do things so that they can, you know, give gifts over the holidays, X, Y, and Z.
yeah.
Um, then also, I mean, tax time is coming around,
Yeah.
guys. If you're serious, truly want to make the decision about a home, let's figure out a better way to use that tax refund
Yeah.
to get you in position to either improve your credit so that you can qualify
Mm,
for for a mortgage qualify for down payment assistance, because yeah, you can improve your credit to be in a position to be gifted money,
Mm,
um, to go towards a home purchase. So there are different things that just take that in consideration so that you can make sure you're using your money wisely, to reach your goal. Because one thing we don't want you to do, if you heard Wilmot's story, when they first brought their home, they thought, let's go work on our credit, but we can just go and pay stuff off and pay stuff down. And typically, a lot of people, they have that same understanding or preconceived notion that, yeah, if I pay this debt down, my score should go up, or I pay this off, my score should go up. And that's not typically always the answer, because again, your credit history and your balances on certain credit items can also affect and determine what your scores are. So
yeah.
reach out to your mortgage professional. Allow us to do a dive into your credit history, and allow us to create you a simulation that's going to tell you how to get your scores where they need to be.
Yeah. So, and let me say this real quick, and I want to say this the right way,
Mhm.
because I deal with a lot of people that want to buy homes, right? And some of them do come to me, and they say, "Man, I got my own lender." Okay, I got that. Let me explain something real quick. When it comes to buying a house, all lenders are not created equal. I'm gonna just say that.
Mhm.
Okay, I've dealt with a lot of different ones, great experiences with the Abrahams, and I had some bad experiences with some other lenders. Okay. And I just want to say, like, hey, definitely listen to either your real estate agent, or if you find someone you trust, like the Abrahams up here, I'd highly recommend listen to someone that's in the business, because I know some great banks out there, and I know one in particular a lot of people love to go to. Not, but I'm not going to say any names. But and I told him, I said, man, it might be great in banking, but that doesn't mean they're great in lending.
Mhm.
Okay. So I want you to have the best experience possible. Please reach out to me or the Abrahams if you need any recommendations for where to go to get your lending needs.
Mhm.
Okay.
Yeah, and that's
Absolutely.
really good. That's really good. I'm gonna add one thing I wanted to make sure I say, because we're talking about credit and we're talking about credit history and just the importance of the true credit history. And so sometimes we do understand that life happens, right? Life happens,
Mhm.
and you may lose a job or you may fall on some type of hardship, and you truly can't pay these things, right? So what I strongly tell you and suggest for you guys is there are resources out there to assist people who may be going through some type of financial hardship. Make sure you reach out to, your companies. Like, don't the worst thing you can do is avoid creditors, right?
Right.
If you
Mm,
can't make a payment, or if something came up, call your mortgage company, call your car loan company, call your student loan company. Just don't avoid it and let
mm,
them report 30-day late payments, or let them charge off the accounts or whatever. I mean, people are human and they understand that things happen. So just have a conversation. Say, hey, I lost my job. Is there a way for me to do a forbearance? If there's a way for me to defer this payment, is there a way for me to set up a payment arrangement? I only can afford $10 a month. Like, they will work with you. But what they
Yeah.
won't work with if you just avoid them. If you avoid them and you don't address it, then what ends up happening, you get a snowball of past due accounts, collection accounts, and all that does is put you further and further behind of meeting your goal of buying the house. So just make sure that you just do that. If you ever need help with that, we're here to help you with that too. We work with nonprofit local housing counseling agencies as well that can assist people who may be going through hard times and need, to some assistance with figuring out how to get back on their feet so that their credit isn't severely impacted and it doesn't put them years behind further to purchase a home.
Sweet. Well, man, I think today's topic was a great help, a great identifier for people who had those questions about the importance of credit history, and how can your credit history affect you applying for a mortgage. So
Mhm.
guys, man, I really hope we dropped some good information for you. If you're watching this video, watching this live, or you go back and check out our YouTube channels, I really hope that we can, continue to provide good information for you guys now and in the near future. So we
Yeah.
appreciate
So
you.
how can we find you guys? How can someone find you or get in contact with you if they wanted to reach you?
Well, if you want, you can message me on Facebook or Instagram, or also I have a YouTube channel, the Bear Group, brokered by EXP Realty, on YouTube. Go ahead and subscribe, hit the like button, that YouTube stuff. Also, if you need my phone number, 803-347-3329. You can contact me, shoot me a text, give me a call. I'll be more than happy to serve you.
What about you, Gav? How can they find you?
803-707-6809.
What's up with these 803 area codes, bro?
Orangeburg stand up, We're going
The bird,
Bowman,
stand up.
Bowman,
There we go.
stand up. Orangeburg County, baby. Yeah, I mean, they can find us on find me on Facebook, Gavin Abraham, Instagram, Mr. Get It Done, I believe. And then LaShawn, tell them about our YouTube page.
Yeah, so we do have a YouTube page. It's Team Abraham, All Things Mortgage. So you can definitely find us on YouTube. We also have a TikTok account finally. And so LaShawn Abraham, you can follow us there. Facebook, same thing, LaShawn Abraham. I'm pretty much the same across the board on all. Instagram, Facebook, LinkedIn, and TikTok. So
cool.
So thanks, guys.
Well, another Teaching Tuesday in the books, guys.
All right. Until next time, we will talk with you guys later.
Peace.